What is up, team, and welcome back to part 3 on how to trade as a beginner. Now, if you have not seen the first 2 parts, go ahead. The link to the playlist will be in the description. Watch the first 2 parts. Now, if you've seen my videos before, you know I've covered more advanced trading techniques, strategies. I'm obviously a trader myself, not just that. I actually post all of my personal trades live in real time inside my mentorship group to prove that I am a profitable trader. So again, I just don't want you ever listening to someone who cannot prove to you that they are in fact successful in what they are teaching. Okay, so with that said, The Daily Traders is one of the largest trading and investing communities out there. We have a combined following of nearly 6 million followers. So you're in the right place to learn how to trade as a beginner, okay? If you are more advanced, I'd highly suggest you check out my other videos or click the first link in the description to get access to the masterclass, which covers my 7-figure trading system, in addition to getting access to the mentorship group to see when I am buying and selling a stock. Okay, so without further ado, let's get into this video. I'm gonna pull up my screen and we're gonna be talking about indicators, moving averages, and how it is that I trade. So again, I am a swing trader. Okay, I do all my work on the 4-hour time frame. Now, I look at trends, and within a trend, I am trying to identify a pattern. Now, I use a series of what are called moving averages to find certain setups within a chart. So for example, this is ticker symbol BAX. Now, we can see the overall direction here, as we've talked about in the previous lesson, is bearish, okay? So chart is going from the top left to the bottom right. Now, on the other hand, if it was going from the bottom left to the top right, that would be bullish. So we have identified our trend. Now, next we're looking at a pattern. Now, the pattern here is a very clear pattern of lower highs. You can see we formed a high on the 4-hour time frame at 89.70, and since then have been making lower highs all the way into this low formed at 54.31. Now, what I'd like you to do is apply 3 moving averages. And these are the moving averages that I use to identify setups. These setups I go over inside my masterclass, and I briefly talked about one of these setups in the previous lesson, which was a break of pattern. I trade on TD Ameritrade's Thinkorswim platform. I'm not sponsored by them, although they should sponsor me, but you can pull up these moving averages on any other platform. Now, it's important to note that I do not use any indicators, okay? I only use moving averages. Now, most all platforms, you should be able to pull up different moving averages or a moving average and then choose the selected time frame that you'd like to look at. Now, I'm gonna look at the 50-day moving average, the 15-day moving average, and the 180-day moving average. Now, there are both a simple moving average and an exponential moving average. So I'm gonna go up here, and the first one I'm gonna type in is simple. I'm going to add the simple moving average to my chart. I'm gonna go to edit, and there's gonna be the 180-day moving average. So the 180-day SMA, simple moving average, and I'm gonna make that green, okay? And hit apply. Now, you can see we have this green line on our chart. Now, before I add these 2 other moving averages that I use to trade, let's talk about what a moving average is. A moving average, or an MA, is a simple technical analysis tool that smooths out price data by creating a constantly updated average price. This is the 180-day SMA. Now, if candlesticks are trading below the 180-day SMA, you can see that it is acting as a resistance level. So whenever candles are trading below a moving average, the moving average is going to be acting as resistance. Now, whereas on the other hand, if candlesticks are trading above a moving average, that moving average will be acting as support. Now, you can see the 180-day SMA here has been acting as resistance. We've started to rally up toward that level. Okay, we got rejected, started pulling back. Okay, a little rally, nothing much there. Now we're working our way back up to that 180-day SMA. Now, it's important to note that a break above the 180-day SMA means a shift in direction. Okay, so we can play breaks above the 180-day, breaks above certain moving averages. We can use the moving averages to figure out where we're looking to place our take profit and our stop loss on a chart. There's many different ways that you can use these moving averages. You can use series of moving averages to find different setups based on the candlesticks, to manage a trade, to set up your trade plan. I think you're starting to get the idea. Now we're gonna go back and we're gonna add another moving average. Now this is going to be the 50-day SMA. So we're gonna type in 50 and make this red. I'm gonna hit okay, apply, okay. All right, there we go. We have our second moving average on the chart. And same as the 180-day SMA, whether candles are trading above or below, it's either gonna act as a support or resistance level. And now you can see the 50-day SMA has not shown much of either. In certain cases, based on the chart, again, every chart is going to tell a different story. You want to see how well the moving averages are what I like to call respected. Now that is simply because if candlesticks do not care about the moving average on a chart, well then how are you supposed to make decisions based off of it? All right, we're going to go ahead and add in our last moving average. This is going to be the exponential moving average. We're going to hit add selected. We're going to change this moving average exponential to 15 days. Now, this is going to be the 15-day EMA, which is going to be blue. So we've got our three moving averages. Now, like I said, based off of the chart, every chart's going to tell a different story, and we're able to look and see where these moving averages are trading, how candles are interacting within these moving averages to make an educated decision on where price is headed. Now, you can use these moving averages to manage a trade. You can use them to set your stop loss, your take profit based off support or resistance based off of where the candles are trading. So again, like I mentioned earlier, many different things you can do. Another important thing that you want to understand is the 180-day SMA is either going to act as the strongest support or resistance level. The 50-day SMA is going to be followed. And then lastly, the 15-day EMA is going to act as the least strong support or resistance level out of the three. Now, it is also important to note that the amount of times a moving average has been tested by candles, whether it is as a support or a resistance level, the stronger that level is going to be. Here's an example on ticker symbol POOL. You can see the more rejections we get at the 180-day SMA, the stronger that level is acting as a resistance level. So you could take that into consideration when you're looking to play a move to the upside or the downside. Now, looking to play a move to the upside, we could wait for a break above this level. A break above this level would indicate that it is no longer acting as a resistance level, and that means that direction has shifted. Okay, buyers are stepping in, price is moving to the upside, and we can look to capitalize on that move. It is important to note you can see small breaks and tests above this level, but as long as we see a retracement, all right, buyers are not able to hold above that level. We ended up selling back below that moving average. It is still validated as a resistance level. You can see a little test there, pulled back, wasn't quite able to test, little test there, pulled back, was able to hold above for a day or two, but ended up pulling back. So once we get a clear break above this moving average, the 180-day SMA, that's gonna let us know that direction has shifted. Now, what was once resistance is going to be support. Now, it's important to note that these same rules apply with support and resistance when it comes to moving averages as applies on a chart when we're locating support and resistance based off of candlesticks as we did in the last video. Okay, so we're able to use these three moving averages. Now, knowing what to look for is the key. Knowing the right setups to look for when we're scanning through our charts, right? We're visually scanning through, looking to see how moving averages are displayed and represented within the chart on this 4-hour time frame is how I am able to trade. Okay, I have setups that I trade based off of these moving averages. You know the basics. You know how to use support, resistance, and you know what moving averages are now. So you can take that knowledge, you can look for setups, or you can click the first link in the description. I'll put a discount code, join the mentorship group. You're gonna get access to the masterclass and the videos that go over all of my setups, okay? I hope you guys did enjoy this video. I hope you enjoyed the last 3 videos. I'll put these in a playlist. Go back, watch the playlist, share it with your friends. Don't forget to like, comment, and subscribe for weekly YouTube videos and our weekly podcast. And with that said, I will see you all in next week's episode. Later.